People in compliance are often known as the fun police, the business prevention unit. But the thing about compliance is it's similar to toilet paper. It's very important and you couldn't live without it, but it's not very sexy. So I'm the Managing Director of FinTech Compliance. We founded 8 years ago. Very much like Ron Seal, we help FinTech firms with compliance, licensing, and keeping people out of trouble. Oh, and Stuart, absolutely nothing wrong with colour orange. Nothing at all. So the regulators, we have 2 regulators in the UK, Financial Conduct Authority, everyone's starting to glaze over, and the Prudential Regulation Authority. What do they regulate? Well, the PRA, they deal with the big fish. They take care of banks, insurance underwriters, and other systems in that. I'm saying that because I'll go into details, but you'd all end up washing your hair. What do they regulate? The FCA. So the FCA takes care of investment firms, so within that you have investment managers, investment advisors, funds, etc. Insurance brokers, insurance intermediaries, etc. Payment services, including open banking, payment accounts, remittance, etc. Electronic money. So the biggest e-money firm probably that you've heard of is PayPal. Nice, easy job. Consumer credit, loans, debt advice. Peer lending. Peer-to-peer lending is something I've always found particularly interesting because it's a business model which is not viable without a considerable deployment of technology. So the FCA has a few key objectives governing the way they go about their work. So one is they need to ensure consumer protection, so appropriate degree of protection for consumers by placing certain requirements on firms. They are responsible for ensuring market integrity, ensuring the proper functioning of the financial services market, and also where someone has not been compliant, to punish them to preserve that integrity, and also to promote effective competition. The FCA's theory is that an increase in competition will drive down costs and increase quality of service to consumers. So the FCA, how does it regulate? Is it some toothless bureaucratic organisation? Sort of. So there's the rule book. So if you want to play the game, you've got to play by the rules. So it sets out minimum standard expectations. There's a huge amount of guidance in there as well. I did once have a colleague who started in compliance who thought that a good way to introduce himself to compliance was to read the FCA rule book from start to end. No. So, there are requirements on senior staff, their skills, knowledge and expertise, their previous experience, the amount of capital that you have to serve as a buffer, systems and controls to make sure there is oversight. There are thematic reviews. The FCA become aware that certain areas of the financial services market is not working the way it should. A recent example of thematic reviews would be gap insurance sales by people selling cars because gap insurance was not being properly explained to consumers, they found, and it hardly ever paid out and it wasn't very suitable. There are site visits which are scheduled or otherwise. We call it a dawn raid, but they usually come in slightly after 11 because, you know. Interviews. So they will ask you to come in for an interview, and I have attended interviews. I haven't been interviewed myself. They can make you very uncomfortable. It's the old governor's eyebrows. If you say something they don't like to hear, the eyebrow goes up, then you know you're in trouble. There are Dear CEO letters. This is linked to thematic reviews, tangentially. they will identify an area of financial services where they think things aren't being run how they should, and CEOs in that particular area are sent letters telling them how they're probably being a bit naughty and they want to think about sorting things out a bit. There are calls for input, so where the FCA is seeking to regulate a new or interesting area, they do actually ask industry what they think. Would we suggest any changes to how they anticipate regulating it? And they take all of those responses and they ignore them. And they do what they want to do. Then we have policy statements. Once they've had their call for input, or once you have a new direction that the regulator wants to take, they issue a policy statement, and which nobody understands, why about 6 months after policy statement, you'll have finalised guidance. So once they've actually figured out how policy statement, new regulations, etc. work on the ground, then they'll actually help you. Market intervention, quite rare. The gap insurance thing was a recent example. They enforced all firms to stop selling gap insurance for a period until they were satisfied that the market was rectified. Of course, they engage in prosecution, case building. It can be very, very complex though. Then there are public notices, warning notices, final notices. So public notice is kind of an overarching thing. Warning notices are often where the FCA has identified a firm which is carrying out regulated business without a license. So if they're doing it without a license, that's naughty, and they're probably going to try and steal your money. And the final notice is once someone's gone through the prosecution case building thing enough, and once they have been determined to have been definitely very naughty, a final notice is issued. But he fat-fingered it, and he accidentally created a basket for $444 billion. A pop-up came up, and he went, nah, that's all right. Basically, $189 billion of orders went onto the market, and that's a fair volume. And it affected the market, prices altered for a short while. But the reason that they got fined really is because it shouldn't be possible for fat fingers' mistakes to get all the way to £444 billion worth of orders in the market. Something a bit more trendy, I suppose. There's a current case against a group of finfluencers. We love coming up with these new names. Who have been issuing unauthorised communications of financial promotions. Now, if you think of investment advice and names of investment advice and financial services, you might think Hargreaves Lansdown, you might think Goldman Sachs. I think of Love Island. The Only Way of Essex is Essex. Represent, I'm originally an Essex boy. And Geordie Shore, how are you, man? I don't know anyone who would take financial advice from someone from Love Island, or the others, but there we go. So they were distributing FX, CFD, high-risk strategy trading advice.
I know Scotty T.
Do you?
And I wouldn't take financial advice.
No. I mean, these are captains of industry you're seeing right here. My wife had to remind me it's called Love Island, not Sex Island. Yeah. So anyway, don't be complacent, be compliant. And I believe I've left enough room for questions, of which there won't be any, because this is compliance, and you're just glad it's over. Are there any questions?
We take one. think you've stunned them into silence.
Her name's Roma.
That's
probably going to be a question.
That was the single best compliance talk I've ever seen given, so thank you ever so much.
You're very welcome.
You're welcome. You want to share the